What's up, guys? Today I'm bringing you a crazy cool topic talking about stock market seasonality with this guy, Mr. Brooke Thackeray. He writes the investing guide every single year. And what this tool can allow you to do is get a leg up on your competition, understand the trends, the seasonal trends that actually emerge in November, in December, in January, and understand which companies are better to invest in historically, and which ones to stay away from. And it's all contained in this guide. And if you don't want to buy this yourself, great. I'm here to break it down for you. We're going through December's actual historical seasonality right now in this book, in this episode live. So again, those that aren't familiar, this actual resource is a crazy good resource. It's got just all these tables and figures and charts right there like that, graphs. It gives you everything you need to know about every single sector of the stock market in each month. And it breaks it down how much frequency that it beats the S&P 500 by, how much frequency it is to actually have a positive gain on the month compared to everything else in the market. So there's all these data, and you can use this data to then tilt the odds in your favor as an investor. Like it's like if you were scouting an opponent in sports and they say 65% of the time they do this. Well, if you know that data going into a match, you can anticipate that's going to happen a majority of the time. And you can plan for that. Case in point, if you have this guide for you here, it's not a guaranteed kind of method to the madness, but it is, say, let's say 65% of the time this stock does well from X date to X date. You can kind of adjust your trading strategy and investment strategy and hopefully make more money in the long run by understanding the statistics around seasonal investment trends. So let's see what reading teaches here. Let's understand that December typically is one of the strongest months of the year. It is a positive event almost 75% of the time. December, so it's a good one. It ends the year strong. You've all probably heard about the Santa Claus rally, and that is a real thing. It is listed in this book as well. But seasonally, like it's a 1.5% average gain for the entire market, the S&P 500. But there are actual sectors and actual companies within that tend to do even better. This is their time to shine. We're going to get into it here in a second. So stay tuned for that. Going over these kind of notes again, this is all from just Thackeray's guide. It's financials, it's IT, and the energy has a good kind of start to the month, and then it kind of drops off. December 2020, it also gives you a recount of 2020, the year before, to see what it actually did. Reading this here right now, the strongest performing sector was information technology. Big surprise. That's your big kind of corporations, your Microsoft, your Apple, the IT companies there, the cloud computing, all that stuff does really well in December, okay? And why is that? Well, think about it. Think about the actual rationale between this. Let's make an actual rational thought here, right? At the end of the year, what happens? We've got Black Friday just happened. We've got Christmas coming up. What do people tend to get more and more of now as this kind of trend keeps emerging through the annals of history is they're getting more tech-driven stuff. Tech is driving more of our lives. So these tech companies stand to profit more at the Santa Claus kind of rally time. People are kind of dumping money into the product. People who invest money understand that's happening, and they understand that this money going in now for the Christmas season, the Santa Claus rally, is going to be reported in January and February in earnings period. All this cash going in the market now is going to be reported then, and it's going to kind of boost the profits of the stock, boost the companies, and this is why we have this kind of seasonal effect. Beyond the holiday driven, we have some kind of things to look out for. So we know that IT is a really good one, and we have a kind of statistic here, breakdown of how that actually looks, and it looks something like this. So it's called doing the NAS, or the NASDAQ with Santa. If you guys understand, the NASDAQ is a heavy tech-driven ETF and index fund that's part of the stock market. It's taking the S&P 500 and it's just focusing on the best tech companies is on the NASDAQ. It's normally called the QQQ for investing in the ETF or the index fund. So 82% of the time, the NASDAQ will outperform the S&P 500 in the month of December. Again, that means an 18% chance that it won't. But if you're going on statistics, and we can use these to our advantage as an investor, 82% of the time, it's going to beat the S&P 500. So what does that tell you? It tells you that the odds are it's going to do better. So the odds are that you should put money in that stock or that company it's in heightened time for that to happen, and potential for more profit is there. It's there clear as day. Historically, this goes back 30 years of data in this book. It averages it out, and it gives you that percentage chance that 82% of the time, it performs better than the S&P 500. And it also beats the S&P 500 by about 2% on average per year. So every year, December comes around, S&P does its thing, which it does pretty well. Like the S&P is a good month for S&P 500 as well, but the NASDAQ, the QQQ, does almost 2% better 82% of the time. Take it for what it's worth. Understand the stats, understand the details. And this is also not just the whole month. This is also a specific kind of period during the month that you have to understand. And this period is December 15th to January 23rd. So the last half of the month, okay? That's when it starts to click in. And again, take this with a grain of salt. This isn't going to be like to the day specific. You have to combine this with technical analysis and your chart reading, but this will give you the idea of what's happening, what to look out for, what to expect. If it starts a little bit early now, you know that it should be starting. If you can see it on the charts a little bit earlier, you understand what's happening and why it's happening. If it's going to be a little bit later or delayed, you understand when it's going to kind of kick in and when it should kick in. Within that kind of week period, there's kind of a delay, that's fine. And it's going to run into the middle of January, okay? But the first kind of 2 weeks, not so great for tech. The last two and into January, they're booming. That's the big kind of key there. Again, 82% of the time, better than the S&P 500. So that's tech, that's NASDAQ. Do the math with Santa, as they call it. Small cap stocks also perform well, but I want to touch on the financial sector. This one's a big one. And this one also has kind of a same kind of start date from December 15th. And this one actually runs all the way to April 13th. This is like the big season for banks and the financial sector is September to April. And the main driver, okay, is that banks start to report earnings in mid-January again. And the strong performance in December, it's really just kind of people kind of getting their money into the market before year end and kind of understanding that this is kind of the time for banks that they do well. So they want to get the money in now early and ride that wave up all the way into April and kind of capitalize on those gains or potential gains. So 59% of the time, so not quite as much as NASDAQ, but 60% of the time it says 59%, it does better than the S&P 500. And you get an extra 1% return on your money compared to the S&P. So again, it's a seasonal period of strength for financials, which means that big banks here, you have in the States, you've got kind of Bank of America, you've got Citi, you've got Wells Fargo. In Canada, you've got the big five, you've got CIBC, BMO, TD, Royal Bank, and Scotiabank. So there's a bunch of different ones there, but it's an interesting kind of thing to understand these statistics. And if you can apply that, you're not going to make money guaranteed in greater amounts, but you're going to tilt the odds in your favor, making really good trades with this resource. Okay, there are pages and pages and pages of all this data in here. And if you don't like reading it, don't worry about it. I just gave it to you all for free here on this video and on this podcast. So just check it out. If you want to, if you're a numbers person, check out this resource. It comes out every year. It's like $30 on Amazon. You can get it for sure. But if you don't want to do that, and you want to understand and get the kind of big picture topics, make sure you subscribe to my channel. Make sure you subscribe to the podcast and understand that I will be doing these once a month, giving you the details you need to know of what's happening at this month coming up. I'll give you to the beginning of the month. You guys understand the trends. You don't have to actually go read the book yourself. I'm going to break it all down for you and give you the goods that you guys need to tilt the odds in your favor and hopefully become a better kind of investor and make a little bit more money with your investment strategy. So again, like the video if you got some value today, like the podcast episode, subscribe to both, subscribe to the YouTube channel right here if you want to, and I'll check you guys out on the next video. Make sure you don't miss. January is coming up in about a month.